Hey there, it's Will here. I thought I would talk about whether you should be buying Lemonade. It's a LMND, and it's an insurance company. And there's not a lot of stock chart analysis at this point. I just wanted to clarify that what I'm talking about is trading the stock. Now, even if you like a stock and you think it's going to have a lot of potential, I still think it's valuable to trade the stock during uptrends, swing trade, so to speak, and not hold it through down periods, which is pretty painful. If you're into that, buying and holding and not really focusing on the stock at all, you can do that. But what I'm trying to show you is the benefits of buying on the upswings. And you could have a bunch of stocks that you really like, but you could still trade them in a shorter term over time, like Tesla or whatever you're interested in. You don't have to necessarily buy and hold the whole time. And this way I can explain sort of my methodology that I'm suggesting. Of course, I can't recommend any buy and sell of stocks, but just sort of my approach to this. So even if you find a stock that you really like and you're not sure what to do, this is how I do it. So this is the chart. Now I use this program called TC2000. And it's an amazing program. So first thing what I would do is when you have a new stock here, like there's not a lot of data. So like the moving averages aren't really, like you don't have longer 50-day or 200-day moving averages and stuff. So I've got on here an 8 EMA, which is the exponential, and a 3 exponential moving average, which is the only thing that's really visible here. And then what I would do, like one of the nice features with TC2000 is you can go back in time a little bit with the brackets on the keyboard. I'm just going to go back to about here. So when a stock comes out like an IPO or something, from a trading perspective, there's not much you can really do because you don't have like really any data. And so you'd probably want to wait and see what happens. So, how it develops over time. So here on TC2000, there's this little palette. We open that up. And what I would probably do after, 3 weeks or a month or so is draw a line across the tops of the price of the candles. And then you can see how it opened here. And I would draw something like that. It's not an exact science. You could also just do it on a shorter period like this. Okay, so when you have this is called a wedge. So what will happen is it'll either go up or down. You might not think that that's valuable because it can go up or down, but something's going to happen here. And so you wait to see a little bit of an indication. And so you can see that you had this downtrend. That'll happen a lot of times out of a wedge pattern. So there's kind of a squeezing, consolidation, and then some sort of breakout either up or down. So one nice thing with TC2000 is when you're using the brackets, you can sort of go day by day or candle by candle, if you're using other time frames, and sort of imagine what you might do without knowing, what's happening in the future. Like if you go back a year or two on a stock, you can sort of practice moving through a stock. But that was one thing I would do. Okay, let's just go back out to the full range. The other thing is you can see how we have this basically downtrend here. And in this scenario, I wouldn't be buying. So I wouldn't have bought this. I still wouldn't have bought this stock at all. And you can see when it starts to come up, you might be tempted to think, oh, it's coming back. But with this line that I extended, it's amazing how many times that happens where it hits this line and then it comes back down. The other thing is that I use this 8 EMA, and I want to see that it's above that black line there. And also not just above it, but you want to develop a trend which requires you to have higher lows. So you would need something like this. If I draw a line like that, you need the stock, or let's say if I draw it flatter, I would have needed to see it positive at this point and then continue to go up. So because there's a little bit of a trend like here, right? And you also have a little bit of one here, but it's not enough to really establish an uptrend at this point. And you can see that a little bit longer term, not that long, but a month or two, that you've got this downtrend. And so I would not be buying this right now, but even if you think it's great, wait for an uptrend and then get in. So you don't have to, like if I draw a line, so TC1000 has this feature where you click the left button and you drag down to, say, the other price here. That's a 37% drop. So if you bought the stock up here, you're waiting, you're down 37%. And some people put a lot of money into individual stocks, so that would be pretty painful. So what you can do is, this is TC2000 shows you the sector, financial services, and then the industry, which is insurance, property, and casualty. So this little icon here says industry info. So if you click this, and it shows you the industry. So you see related stocks in that same industry. So this opens up a window here. And I've got this sorted in a certain way. I use the slope of the 8 exponential because I want to see that there's different orders, different values that I'll use to arrange my stocks. But this gives you the stocks that have a better upslope, so a better uptrend essentially. So if we look at these with TC2000, you can space bar through them. So I'll take a look. That's not too bad. This one, I'm just going to delete these to show you. The similar sort of scenario. So you can see here that we had this downtrend similar to Lemonade, right? So what I would do is draw a line like this at the tops of the candles, and then I would wait to see a break of that trend, that downtrend. So you can see, even though it's starting to flatten out here, downtrend, flatten out, and then now I'm starting to see a breakout. Now, some people would get in right at the breakout of the change, but that's fine, but that's a fairly risky situation because it may not be an established reversal. So another way to do it is to look for a lower, look for a higher low, so that you have, so basically what happens is it goes up, it comes back down a bit, and then it goes back up. So this would be kind of if I draw a little line, you've got your low here, and then you've got this next, this is a higher low. So now you've established kind of a trend. And if I extend this up further, you can see that we're at this trend again. So it comes up, it pulls back, and hopefully it supports at the trend. It's amazing how often this works. And so, there's no guarantee, but it's looking like this support. So similar to Lemonade, basically, you want to let this downtrend keep going until you see a reversal. And then if you want to wait till you've established a higher low and have that solidified uptrend, you could do that. There's other indicators that you can use below the stocks, which is like a MACD. So you sort of see a crossover of the MACD, which indicates momentum. Stochastics, you can Google all this, but this is basically an oversold situation, but it's not a guarantee. But when you're down in this lower range, the stocks are oversold. It can stay down there for quite a while, but you want to usually see a rising stochastic that can indicate that you're moving up, and then those are other indicators that can give you some validation. But essentially, I'm looking at simple price action of trends down and up. So if we go back to Lemonade quickly here, you know, you can see how we have that downtrend. And I don't think that that's the time to buy right now, but you know, that's just what I'm suggesting in terms of how I would look at this. So hopefully that was helpful to you. If you want to pick up TC2000, you know, like for the features of finding similar stocks, the drawing tools, the moving averages, the watch lists and stuff like that, it's amazing. It's an amazing tool. I've got the gold package. If you want to get a free trial and even $25 off if you sign up, check out the link in the description of this video. If you want to learn more about trading stocks, and also join a Candlestick forum where you're in there every day, like a chat group, a chat room. So you'll see stocks, you'll see feedback from Stephen Bigelow, who's the best candlestick analysis guy there is. He gives you his picks in why every day. There's a lot of people that discuss the stocks and in the candlestick analysis. And there's a course as well that if you want to learn about not just picking stocks, but your management of your trades, getting in and out, your stop losses, and all the things that go around stock trading, check out the links below in the description. We'll talk to you in the next video.